Let's talk about the term shipping. So when we use the term shipping, we're talking about shipping or freight or delivery. All this means the price that it takes to get our inventory to us or to our buyers. Let's talk about the terms. It will be listed on our invoice as either FOB shipping point or FOB destination. P stands for free on board. And this is going to tell us who is responsible for the payment and how are we going to account for it. So let's look at the one on the left, FOB shipping point. FOB shipping point means that the items, we're going to be talking about selling books, change hands at the point of shipment. So we're going to talk about two different companies here, well, two companies and one person. We've got Pearson Publishing selling to Barnes & Noble selling to you. So if we are Barnes & Noble and we purchase our books from Pearson Publishing, then we are buying inventory. If we have FOB shipping point, that means that when Pearson shipped it to Barnes & Noble's, it changed hands at shipping point, which means that the whole time it traveled to Barnes & Noble, it belongs to Barnes & Noble's, which means that they paid the shipping. So an easier way to remember that is FOB shipping point, the buyer pays. Let's go over this. So FOB shipping point means the buyer pays because it changed hands at the shipping point. Look over here. It already belonged to the buyer the whole time it was traveling. So the buyer pays. If the buyer pays, that means that they are buying inventory. If they're buying inventory, that cost of shipping is just another cost of inventory. So since the buyer is paying the cost, they will debit merchandise inventory because it's a part of inventory. So if the buyer pays under FOB shipping point, the buyer would debit merchandise inventory because it is a part of the cost of that inventory. Now, if it would have been FOB destination, say we're still Barnes & Noble and we're still buying from Pearson Publishing, it was still FOB destination. In this case, Pearson Publishing paid because here they sent the books and the whole time it was traveling to us, it still belonged to Pearson Publishing. So in that case, they would have to pay, and us, Barnes & Noble, does nothing. So they had to pay the shipping in order for them to make the sale to us. So since they had to pay this to make the sale, the seller will record this as a selling expense. So if you're buying it and you have to pay the shipping, you debit merchandise inventory. If you're selling the inventory and you have to pay the shipping, you would debit selling expense. So if the buyer pays shipping, debit inventory. If the seller pays shipping, debit selling expense. You could even call this delivery expense, but it will fall under the selling expense. Okay, so let's recap this here. Who pays shipping? Well, it depends. If it's FOB shipping point, the buyer pays. If it's FOB destination, the seller pays. What determines if the shipping cost is added to inventory or categorized as a selling expense? Well, when the buyer is buying inventory, it's debited to inventory. When the seller is paying the inventory for the inventory it sells, then it will be recorded in delivery expense. So now let's look at this example and see how the shipping affects the total sales price. Okay, so it says determine the amount to be paid in full settlement of each of the two invoices and assuming the credit for returns and allowances was received prior to payment and that all invoices were paid within the discount period. So in letter A, we have the merchandise that costs $4,500 minus 1% of $4,500. So we will include that in our settlement price. And then the freight that was paid by the seller. So if it's FOB shipping point, then that means that the buyer needs to pay. So we're going to actually add this into our cost because the buyer is responsible for this. So we would say 4,500 times 0.01 and we would subtract that 0.01 out, the discount. subtract the 1% out as you learned how to do earlier, and then do the same thing with the $800. So you could actually multiply this times 0.99 if you didn't want to take the 1% and subtract it out. Multiply this 0.999 and then add back the $200. The important thing to see here is that we do not take the 1% discount on the $200. We don't take discounts on shipping. So the total amount would be $38.63. So you've got a purchase of $44.55. The $4,500 minus the $4,500 times the 1%. So the original price of the inventory minus the 1% discount. And then the less the return, which is your 800 minus your 800 times 1%. And then you add back the shipping. That is because it is FOB shipping point. And what that means is the buyer is paying the shipping. It doesn't matter that the seller originally paid the shipping. They're going to bill it to the buyer anyway, so they'll get their money back, but the buyer is actually going to end up paying the shipping, and they will bill the buyer. So let's look at letter B. This one is FOB destination. Now that means the seller is going to be the one to pay that, so we will not add the freight to our inventory cost. It will be everything the same as we just talked about, except for adding the shipping back. So you have a purchase of $4,900 because you had a $5,000 purchase and you subtracted out. This time you had a 2% discount, so that would be $5,000 minus a $100 discount. That's how you get your purchase of $4,900. And then you had a return of $2,500 minus the 2%, so there were a return of $2,450. So you have $4,900 minus the $2,450, which would give you a $2,450 of inventory left. Notice we do not add back shipping because the buyer, are not paying for shipping. So if we're not paying for it, we don't add it back. The seller will be paying the shipping. So this is some of the ways that FOB shipping point and FOB destination affects our transactions.